Good morning, everybody, and this is your DAX setups for today. So, yeah, pretty much the narrative stays the same. We are sort of top of channel here, and that's the current small channel, and then there's sorry, wrong tool, and there's a bigger channel as well. So we are top of channel. We are sort of in a zone. If you just look left, you can see that was a previous swing low. And bear in mind that for pretty much most of June, so from early June to July, we were seriously confused and using this zone as a support area. So it would be foolish to assume that that is just going to be broken and we move to the upside and just ignore it. This is going to be fairly difficult to get through, and we're going to need some kind of catalyst to drive through. It could be in the data that's coming out, so we do expect more data today and tomorrow, and it could also be driven by a central bank somewhere in Europe. So I'm a little bit cautious. The trend here on the 8th hour is ranging. We're in amongst the moving averages at the moment. Look at my oscillators flattened out, so there's no real trend. But when we get down to the lower time frames, that's where it starts getting interesting. So let's just get to the levels we want to be trading. So 3 hour, you can see above the moving averages, we're coming up to the 150 EMA, and that all lines up here at 17,972. And remember, when you look left, that's the swing low of this move. And it's not the exact swing low, it's the let's just put both of them in so you can see it's a little bit of a zone, that swing low, and you can see prices pretty much in there with an exhaustion bar. So there are bears waiting here for a signal that is going to indicate a move down. Even if it's down to the bottom of the range, they will definitely be sitting here waiting for something. Now if we look at yesterday, a big up, big down, big up, big down, big confusion, but grinding higher. Not really testing. Do this. So we had this swing high that is clear, and then if you look left, there's a high of the day, which is what it picked up. There we go. You can see it picked it up twice. Pin bar, inside bar off it. So from an hour perspective, there was an entry, 67 points. And if you're still holding that, you'd be in profit. But this is a grind at the moment. And it's typical price action when you've got a very strong area of resistance ahead of you. It kind of grinds because people are trying to get in early for a move down. So this is what happens. And then there's a whole host of stops just above this zone. So the zone that you're looking at the moment is 17,972 and 17,944. I definitely don't want to be just jumping in long up here. So we would need to break this to the upside, come back and test it, and sort of nullify this range completely. And there's only a 25% probability of that happening. There's a higher probability of this range breaking to the downside and picking up one of these lower end tails. And for me, something along the lines of that, move down to 17,671. But just remember, you've got political noise. In other words, you've got the federal banks around the globe that are now panicking because people aren't spending money. So that's why they raised interest rates, because people were spending too much money. And now we're not spending enough money, so now the economies are starting to stall. So they need to do something. Anyway, interest rate cuts are coming. The question is just when is it coming? And if that happens, for example, that's announced today, then you're going to see price break through these structures, and that 25% probability of the moves higher is definitely on the cards. So I wonder if there's a way of saying it's a high probability 25%. Get what I'm saying? Anyway, definitely don't want to be risking too much because it could go against you for a move to the downside, and that's the way you should trade it. Just ignore the noise and wait for a pullback onto structure and pick up that structure for a trade to the upside. So there was an opportunity yesterday. There it is there, big, and this one was also an opportunity, but just a little bit short of the structure. This one was pretty much on the structure, so you could have been waiting on the structure if you really wanted to. Something like that with a stop below. I'll take it a little bit lower, say 50-point stop loss, and you'd be sitting with 129 points if you're still holding that. So for me, it was going to be very messy. I'm just going to do 2 levels. You'll get what I'm getting at now. So have a look at all the fractals. So there are fractals here, and there's lots of them on the 15 minutes. So one of them is going to hold up price. So we do have this bigger zone of resistance, which we in amongst the moment. So that's 17,944. Could find support here, but I think it's more likely that you're going to find support lower down, sort of close the gap. There are other little gaps here as well. So you're going to see, if I do that, you can see all these fractals. So this is just another zone of support. This would be ideally the zone I'd be waiting for, 17,902 and 17,881. Could just stop and turn here at 17,924, but I don't think so. I think you're probably going to come down. This is a bit parabolic here from this entry at 2:15 GMT time. So 2:15, 2:15, 3, 4 German time. Anyway, to me, just wait for a swing back, just pull back onto some structure, be patient, wait for the inside bars. There's a nice juicy inside bar, or the pin bar. These patterns are also starting to come into play. It's a piercing pattern, so when price gaps down and then runs up, but it needs to close halfway up the bar for it to be valid. So for me, it's engulfing bars, pin bars, and then inside bars. There's an example of an inside bar. Here's a pin bar, inside bar, or structure as well. So those are the 3 candlestick patterns I look for, and if you can just back test it, you'll see why I do that. But if you don't see that, and if you don't see it on the level, don't take a trade. Wait for the next, because there'll be another swing low. Just wait for the next swing low, and it should work itself out. So for me, wait for the pullback. I'm not too excited about 17,944, and I'm not that excited about 17,924. Could swing there, but I'm not overly excited about it. I'm more interested in a pullback to 17,902 or 17,900 and 17,881. Could also be a even bigger swing back all the way down to 17,826. That would also be something that interests me. But just keep your risk low. So in other words, reduce the size of your position size, your lot size. Extend your stop loss a little bit so that you're still risking the same amount of capital that you would normally risk, but you just got a bit more wiggle room with all the volatility. And be patient. Anyway, that's it for me today. I hope it helps, and we'll catch up with you tomorrow. Cheers for now.